Hey, good morning, everybody. Bob, Trade Genius. 18th of September, a very pivotal day. No clue what's going to happen. Just going to have to react like everybody else. However, I want to show you something a little bit different that kind of caught my eye. And so here's the dollar index, and the dollar index is basically the value of the dollar against five of the United States' trading partners, with the euro being number one, Japan being number two, and then you got the Swiss and the Swedes in there. So ironically, China, because they don't float their currency, is not in there. But if you noticed here, so the dollar's been in a trend up. This is a monthly chart, for the last, at least the last 8 years. And you had a bit of spike here and going into all the interest rate increases here, but we peaked in 2017, and so pulled back, and now we're trying to climb our way back up. But that's not the story I wanted to tell you. I was looking at gold and how's gold doing really? And then I did a ratio of basically the dollar index against gold. And you can see that gold has actually been strengthening against this dollar index, which I found very interesting. So the dollar is losing ground against gold. So the purchasing power of gold is increasing. You flip this, it would be the other way. And so I thought I'd share that with you guys. Is that gold has been pushing higher, and the dollar's been pushing higher, and it's putting a lot of pressure on the rest of the world. But gold is a currency, is the strongest in the world, and you're seeing it right here, which is pretty amazing to me. Now we have to watch and see here, because we're getting into the area here that it's getting actually oversold. So either the dollar starts to weaken and gold relatively will be stronger against the dollar, or the dollar is going to get super strong against everything again. It all depends on what the Fed's going to do. But there's been an interesting thing happening over the last couple days. The overnight lending market has now broken. And when I mean broken, it means it's becoming transparent. That it's usually kept in a genie in a bottle of basically suppressed interest rates. This happened in 2008 as well, when banks just refused to lend to each other. They didn't trust each other. And then the lending rates have been popping 5%, 7%, 10% overnight. And the Fed had to intervene this week to the tune of creating $60 billion out of thin air to be able to satisfy a bank's liquidity problem. And then they swapped treasury bonds with that. And so what that's telling the market participants is that it looks like we're going to go into basically QE again. The bonds have to be bought because there's no natural buyers for them. The banks have to buy them because they're what's called primary brokers. So in order to enjoy all the privileges that they do enjoy, they have to pay the piper by buying any bonds that are not bought at auction by the private market or other sovereign states. And now they're stuffed to the gills with bonds. And now the Fed's going to have to relieve that pressure. So all quantitative easing means is destruction of the value of the currency, because you're pushing in more money supply. And the only thing that keeps it from becoming hyperinflationary or just more inflationary is that the velocities collapse. And the reason for that is that the wealthy have no need for money beyond a certain point. So they just simply invest it, and they stuff it into things, not necessarily in good investments, but and when I mean good investments, by good meaning creating an economic expansion, they usually stick it into financial assets. And that's just considered dead money because it doesn't really create the velocity within the economy to drive growth, taxation, and also inflation. So that's why we've just been slipping into a slow deflationary environment. And I think why more people have been drifting into gold, and why Bitcoin even exists, and why Bitcoin has come alive in 2019 is because of these anomalies that are starting to occur again. And the only way they're going to have to paper it over is by printing more dollars. So should be interesting. Anyway, we'll be back at you after the end of the Fed meeting here to see if we get any kind of secular move that we can hopefully trend off of and make some money, or if we're just going to still be in this chop that we've been in for months and months and months. Thanks for listening. Have a good one. Bye-bye.